Rahul Chadda of Mirae Asset Global Investments joins us from Hong Kong. Rahul, good to have you. Thanks so much for joining in. Just wondering, what to your mind is a bigger event risk for investors over the next 3 to 6 months? Would it be any more European problems that could come out, or crude, which could be a big problem for the equity market, proposed or the hoped equity market rally?
I think over the next 3 months, it's more a concern on the rising oil. Greece, for the time being, looks like it's been settled, though you keep hearing all these voices where a section in Europe believes that the damage would be far less if Greece is made to leave Euro at this point of time, but that's a remote possibility. I think at this point of time, particularly for emerging markets like India, rising oil remains a big vulnerability. And we've seen that in past. I mean, it was a case in 2008, it was in 2011, where oil impacted consumer demand and derailed the recovery.
India has to come out of its, come out with its, of course, quarter 3 GDP figure. The expectation is between 6.3 to 6.5. Reasonable, do you think?
I think that's a fair number. We're clearly seeing slowdown happening in India, and this is a culmination of what's happened all these 12 months, where approvals were hard to come through, where again high interest rates were kind of curtailing demand. So clearly, I think going forward, the key thing again for India is what is the inflation print we see over the next 2-3 months, and would commodities, particularly oil, remains range bound, giving central bank a little ammunition to cut rates over the next 3 to 6 months, because I think that is what is markets, is what is driving markets, and that's what markets are looking to for being more positive on the country.
Rahul, what are expectations for the upcoming budget in India? Are investors booking profits ahead of the big event? Because we've seen a correction coming in for the last 4 days, and could something material come out of the budget per se, which will enthuse investors?
I think we'll clearly see some bit of a profit booking ahead of Union Budget, because we've seen a sharp rally in the month of January and to an extent February in India, which has been completely unprecedented. We've got key events, which is a northern state, Uttar Pradesh elections results which come, and market is anticipating a favorable verdict for the ruling party, increasing their vote share. It's highly likely that we see some bit of a rise in taxes in the budget which is there. As investors, we would be watching from a government divestment program, any update on that, government's steps to keep the fiscal deficit under control, and any increase in taxation, both direct or indirect, in the union budget.
What about the fact that, this rally has pretty much stretched itself? Do you think that you perhaps take a stronger stance in India post the reforms?
I think it was more of an anticipation. I mean, last year the Indian markets was one of the worst performing markets in the region, and that was largely on back of the fact that inflation was fairly entrenched in the system and policy making was fairly kind of a stagnant. We've seen reversal of both of them. Inflation has peaked, and for the first time in 2 years we saw inflation print below 7% last month. In terms of policy making, also talking to corporates on ground, we get a sense that approvals are far more forthcoming now. Government's also taken steps, particularly from PMO, to resolve all the fuel supply issues for large power projects. So I think things are moving, though one would love to see things moving a bit more faster. Outside this, fiscal deficit remains the single key concern for Indian markets. So if we see some bit of a concrete plan from government to keep the fiscal deficit in check, I think that should be positive for markets.
Rahul, what sectors in Asia and in India in particular do you like right now?
We've kind of reduced our underweight in financials, which we were having in 2011 for the region. So we were fairly neutral to a marginal overweight in financials. Outside that, we continue to like consumer, good, strong franchises, which have though not participated in the rally, but let's say still look attractive from a 2-year perspective of the region. We continue to be positive on the energy space, but that's more from the region rather than India, because India options remain limited. And again, we like the tech space quite a bit. So that would include some bit of technology names either in Taiwan, Korea, or again in India we like the software place.
All right, give us a sense then on what are the big events that you think can disrupt the rally or the reallocation that we're seeing in emerging markets right now.
Outside Iran, which is really a determinant of where crude oil prices head from here, I think we clearly have the next round of LTRO funding and size which comes up. I mean, a lot of us hope build for a 700 billion euro number, somewhere around that. If that number comes to be a much lower, that may kind of disappoint markets. And clearly, I think also one has to realize that this market is also responding to reasonably fine data or a good data which is coming from US. So should we see again that data getting impacted and consumer demand waning off, that may impact the markets.
Rahul, before we thank you, just want to take a couple of your minutes on discussing about Greece in particular, because a lot of people are arguing that while this has been done, there are more problems ahead, and it appears that the EU leaders are worried about how a possible full-blown bailout could lead to a systemic failure. Would you agree with this analysis?
See, that's where the jury is still out. There is a section in that camp which believes that they can live without Greece. I mean, the systems are robust enough, and over the last 6-7 months, they've become confident. But also there is a majority of the camp which believes that it's probably not worth the risk. I mean, the amount involved is much lower, but you don't know how the contagion of that would play out, because these leaders realize that there are much bigger problems and in Italy, Spain. And I think a more constructive route would be providing ample liquidity or a monetary support in the interim while nations like Italy reforms their labor markets and put their house in order.
All right, Rahul, before we let you go, just a final word really on what you make of the European situation with Greece pretty much being in the center of all the action. If Greece steps out of the EU, do you think leaders will be able to contain the crisis?
Honestly, it's anybody's guess, because we don't know. Financial markets are all interlinked, so it's hard to assume what could be the collateral damage, let's say, for some banks who have exposures to Greece. The French and the German banks are much larger, relatively well capitalized, but the weaker Euro nation banks, it can very well kind of a trigger of a banking crisis. So it's clearly uncharted territory.